Hey guys, Justin S-Team2 here, and so today I wanted to talk about investing in the stock market because it's something that I enjoy doing, and I post about it on like my Snapchat and Instagram sometimes and stuff, and people are always very curious about it. They want to learn more about it, and I always try and send them my little referral code to Robinhood because then we both get a free stock. They get a free stock, I get a free stock. If you don't want the stock, you can just sell the stock too, which is pretty cool, which is what I've done with a couple of them. Um, so I was very hesitant to post anything like this on my YouTube channel just because I haven't really been investing that long, so I feel like I shouldn't really be giving people advice. But I still want to show people basically how to invest so they could, invest themselves just so they can actually have the tools and then kind of understand the basics of it. So yeah, of course, like I haven't been really investing. So what I actually did is I used to day trade and swing trade, which means I would buy a stock on the same day and then sell it the exact same day. I mean, sometimes I'd be in and out of position in like 4 minutes, right? And then I would do the same thing where like I'd buy a stock and then hold it for like a day, and then next day I would sell it. Um, and then when I looked more into it, I found out that's taxed as income instead of however stocks are taxed regularly. So I've heard that's like a worse tax, as well as things that I had to spend a lot of time on it. Right, like I would have to be staring at my computer and just look for the perfect opportunity because I knew what I was looking for. I knew I could know the patterns. I knew what I was looking for, and most likely I was really profitable at it. But I realized, you know, and so, had I just invested long term, I could be making almost or even more profit than I am trying to beat the market by like day trading. So I decided, instead of putting so much time into it, I should just buy these good stocks and then just let them work for me. So that way I have more time to do other things I enjoy doing. Because when I looked at it, when that stuff you have to cut losses and you have to really put a lot of hours into it. And so I realized, with the statistics, I could be making more money by just buying a stock and letting it do its thing. I could make more money doing that. So that's my little intro. So I just started investing long term. I have it up here. You can't see it, but actually no, I erased it. But December 9th, so that was Monday. So I actually have a chart to show you guys, which I will show somewhere on the screen, and that actually shows the week. So what that does is just show you guys, basically how much money I made and stuff. And I bought like majority of the stocks one day, and then I think on like Wednesday or Thursday I bought some more stocks. So like the numbers would have been higher, but the percentages the percent went down because I added more into my stocks, but it's pretty accurate. It is accurate. What I'm saying is I didn't buy everything on one day. I bought most on one day, then some other stuff on another day, but I haven't sold anything. I've just been buying and holding them. So yeah, I just wanted to show you guys that, and just keep in mind this chart only represents money that I made because my strategy is to dividend invest. So I want to invest in things that have dividends and then reinvest those dividends to have more. So all this, I haven't gotten any of my dividends yet. So this is all just growth from the stocks, which is really cool. So that pretty much just shows you that you can actually make a decent amount. Of course, I'm not expecting every week to look like this, but the good thing is that that doesn't even include the dividends, like I said. So I'll get more money, especially the weeks that I make the dividends. That number, the chart should look nice. Of course, the charts are always going to go up and down, so that's just the way stocks work. But the thing is that over time, eventually you'll be so into, if it's a good company, you'll be so into a position that you'll just be making more and more and more money, because the money you started out with, then you have more yeah, it's basically, I'm trying to explain compound interest. So basically you invest $100 and you make $10. Now you have $110 that's making dividends, not just the 100 that you put in. So that's what's really great. If you guys actually listen to that whole thing, then you guys are serious about getting into this, or at least pretty curious. So all you gotta do is go to your app store. Of course, if you don't have iPhone, you know what store to go to. Then you just type in Robinhood. So of course there's other investing apps, but the one I use is Robinhood. I feel like it's very simple to understand, and that's what I like about it. So it has commission-free investing, which a lot of stockbrokers do now. So it's not as big deal as it used to be, but it is it's very it's all free. Nothing, you don't have to pay for anything. So that's what's really cool about it. So yeah, this is what I made today. Then I made some money after hours. I made a lot more money yesterday. So you can see, actually, see, this is December 9th when I stopped day trading and swing trading, and I took all of my money, invested it into all these different stocks I'm about to show you. So then you can see December 9th. So I actually started out, I invested in all the stuff, and it went down, but eventually it started, this is all like within the same day. Then you can see here as I just go through it, my money started to go up. Then it kind of spiked up here, and then you can see, yeah, and then you can see where we're at now. So that's the thing, is if you guys do buy some stocks and like the next day it goes down, don't freak out and be like, okay, stocks are too risky, blah blah blah. Stocks are gonna go up and down, but over time, let me just say this: the stock market has never not been profitable over 20 years, through the Great Depression, through like 2008, 2009, all that. So of course, investing in the stock market is risky. There's no guarantee you're going to make money. So there's no guarantee, but I would rather risk. I'd rather risk my money in order to make more money, because if you just have your money sitting in the bank, you're losing money because of inflation. So, of course, I'm not gonna say it's not risky, but the stock market's never been profitable over 20 years, so there's that too. All right. So, and if you guys don't believe me, look it up yourself. Not trying to be rude, but I know I wouldn't trust me either because I'm just some kid, right? All right. So these are all the stocks that I bought. So I bought all of these in one day, actually, except for Toyota. I just bought the other day. You can see I'm actually down $1 on it. But see, they have a dividend yield 2.52. So what a dividend yield basically is, for every $100, that's how much money you get. So for every $100 I invest, I'll get $2.52 for the year, which doesn't sound like a lot, but when you start investing with a lot of money, it adds up. Plus, you get the compound interest. Like, I want to show you, like, for example, Apple dividend yield's only 1.14, but just from I've made $33 or 3.12% just on just investing in it. So even though my main goal is just to invest in these stocks so I can get the dividends, I can definitely make some money here. Like let the stocks go up. So you want the stocks to go up as well as the dividends, and it kind of just all piles together. So yeah, these are all the stocks I bought. AT&T has a really high dividend yield, which is nice, and they're actually increasing it. You can see there in the news. AT&T to rise quarterly dividend by 2%, 52 cents a share. I have 27 shares. You can see the equity right there. So I have $1,000. So yeah, so I bought all of these stocks. So I wanted to show you. Oh, I didn't. I got glue today because I actually referred my friend Ashley, and she signed up, and I talked to her. She said she got GoPro stock for free, and then I got this stock. So I'm up $6 because I haven't actually, I didn't pay for it, so they show it as like +6. So yeah, that's pretty cool. I got that one for free. And then this is the one I bought like the other day. It should say. So yeah, I bought one on December 13th. So yeah. Or two. Or I bought like one and then I bought another one, I think. I don't know. Anyways, yeah. So these are all my stocks. So what I want to show you guys is actually how much I have in each of these stocks right here. So you can see it's pretty about. I try to put 1,000 into about everything. I have like some miscellaneous stuff like Home Depot, and then Omega Healthcare Investors. So, but that's how I have those stocks like that. So this is actually represents the global economy. So they say you should invest less in that because I don't really know actually, but basically I kind of have more confidence in the U.S. market than the global. But it has been doing well for me this week. But so yeah, they say like more U.S. market. So these are all these are all like like they're like American companies mainly. So this is like the S&P 500, which is what Warren Buffett says you should invest in. So I have a bunch of, what are these called, index funds. So I have a bunch of index funds. So index funds are really good because they're a lot less risky, because they're a collection of a ton of stocks, not just one stock. So this is what I wanted to explain. So when you invest in something like Apple, you'll have a more chance of making money, but you also have a higher chance of losing money. Because if the say something came out about Apple, right? Something bad news, stock plummets, right? You know, then you lose your money, right? But the thing about investing in the S&P 500 is that it's like a bunch of companies put into one index fund. So say one of the companies fails, well, you're still not going to lose all your money. And you can look at these charts and see how much money they've actually made. So like I invest in Apple because Apple made 61% last year, which is crazy. That's it's very high. So you can see there's a lot of profit there, whereas, these can still make like, like this made like 20% last year. So those are all, but you can see they're very, it's kind of just like a line going up. So investing in these is a lot, investing in index funds is a little bit more safe because, they're a little bit more steady. Whereas when you invest in individual stocks, it's a little bit more risky, but if it's a really good company, you can say like Apple, there's more room to make a lot more money. So it's up to you what you guys want to do, but I just want to show you guys basically index funds are, lower risk, less reward, but still, it's a lot better, way better to have your money in an index fund than just sitting in the bank, in my opinion. But again, that's just my opinion. Like I said, you can lose money in these, but generally, I mean, all you got to do is, like, say you're interested in a stock. Let me just type in index funds. So I click on this one, right? So I can look at it and say, okay, well, it made 16% last year, it made 40 in the past 5 years. This looks like something pretty solid. It's got a dividend yield. I might invest in it. I won't invest in it because I don't really know what it is, but because I prefer to invest in like S&P 500 and stuff, but oh, this says it is an S&P something. I don't know, but that's all you got to do. Like, this is something that, is worth investing in. You can just look at the history, right? So like this one, I can look at it and go, okay, well, it made 7% last year, has a high dividend yield. That's why it's called what it is. So I'm like, that's something that I'd probably want to invest in, based off previous patterns. So I know this is kind of boring, but if you guys actually listened, I hope you guys understand. So again, stocks, you could definitely make money with them, but they can be risky. Index funds, you can also make money with those. So what I did was, you can see my equity in these is I invested a lot in index funds, and then I also bought some stocks. So I have like Apple, Home Depot, AT&T, Omega Healthcare Investors, the free stock, and then Toyota. So that's just to show you guys basically. And then you can see here, like I said, I made 0.9% last week. And when I was day trading, my goal was to hit a 0.5% a week. So I would say that's pretty good. Now I know there's a lot of like positive news and stuff. So it's probably not going to be like this every single week, but I can update you guys if you're interested. But for all my friends that are interested in investing, and before I go, I'm actually going to buy a stock to show you guys how you do it. So we're going to change this to last price. So these are all the stock prices. So also another thing I want to go up, it's good to have a diverse portfolio. You can see like Apple is only 14% of my portfolio. This is only 0.5%. This is 13% of my portfolio. So you want to diversify it so that way if one of the things go bad, then you still have your other investments. So let me actually go back here. So when I look at my total return, you can see I made 33 in Apple, -2 in Home Depot, plus this, minus that. But since I have it kind of evened out, even though I'm losing money in some of these stocks, I'm still making a lot of money because it's very, it's the portfolio is diverse. So that kind of, I don't want to say it makes it risk free, but it makes it a little bit less risky because you don't have all your eggs in one basket. And I guess you can adjust these too. I've never actually done that. So if you want to, but I'll just leave them the way they are. It doesn't really matter. So you can see the percent change too to see how much like percent you, well, I think that's the percent for today, right? Yeah, percent for today or something like that. I don't know. So, last price. So, I was looking at Key Bank earlier. Where's that? So, these are my watch lists. So, I actually go on YouTube and I watch people. I look at their portfolios, what they're investing in, do some of my own research, um, and stuff like that. So, these are all stocks that I think are like good potential stocks. So, then whenever I want to buy a stock, I look through here or I add more to one of my positions. So, we're going to add a new stock today. Yeah, where was it? I just want to show you guys because this one, it doesn't cost much because you don't need a ton of money to invest, right? So this is $20 stock. So for every $100 you invest, you get 3.77. So you don't actually have to invest $100. That's just how you do the math. You'll still make money even if you only have one share on the dividend. And you can see past year made 30%, past 5 years 45%. It's been pretty good. It was actually down a little bit today, so it's not bad for a buy opportunity, I guess. So you can see right here, it says what it is. So basically, they do like home equity, credit card, personalized wealth management. So they're a bank. They have all these different things here. So they seem pretty solid to me. So we're gonna go ahead and buy in the Key Bank. So it says I don't have enough buying power, but it'll just go and take the money from my bank, and then boom, instant access to the money. So the money will take a little bit to move over, but they give me instant access. Then boom, So it's pending right now because the stock market's actually closed due to the time. But whenever the stock market opens tomorrow, it should execute, and then I'll have a stock of KeyBank. So that's all you have to do. And then if you actually want to sell a stock, it's like the same thing. You just go like trade, sell, however many shares, and then you sell, and then you can go over here, and then you can transfer money withdraw, do stuff like that. There is like a withholding period, so you can't like sell the stock and then get your money like in the same day. I think they have like a premium feature you can pay for, but your money will be held in there for just like, and you can see like the percents change because I have more money in my portfolio. So yeah, when you want to actually withdraw and stuff, you have to let your money sit there for a little bit because they actually that's how they make their money is they use other people's to invest. But don't worry, your money's not going to change. It's banks do the exact same thing. So say you cash out, you have $20. You just have to wait $3, wait like 3 days or something, and then you can withdraw your $20. So yeah, I hope you guys enjoyed this video. I hope that I made sense. Like I said, I'm not very. I've only been investing long term for a week. I mean, I used to like buy and sell, but I decided I'm actually gonna hold these for a year and see how it goes for me, and keep adding onto my portfolio. But yeah, like I said, I don't have a ton of experience, but a lot of my friends ask me about this, and I was trying to talk to them about it. So I decided I would just make a video on it. So let me know what you guys think. If you guys want, I'll keep updating you, and then so yeah, peace out.